Hello traders, Gary Wagner here. It is 11:38 in Honolulu, 5:38 in New York on Monday, 20th day of March 2023, and this is the daily report for gold and silver. Uncertainty absolutely underscores the changes we saw in gold pricing today. Gold is currently fixed at $1,982.80. That is a net gain from the close of New York of $9.30. But if you recall, in Globex, after New York closed, we saw a rise of up to $70, taking gold to $1,990 plus. But the real interesting fact is the high of the day, which broke above $1,490, and then sold off briskly from that point. The differential between the high and the low being $1,970, is $44.90. Now, the net change in gold currently is 0.47. When you compare that to the decline in the US dollar, which was 0.44%, you can see that futures traders were in essence having a wait-and-see attitude about the future direction of gold. Although we believe it will move higher, the short term, meaning the next couple of weeks, contains an extreme amount of uncertainty. Now, let's compare that to spot gold, because that paints a different picture. Spot gold is currently fixed at $1,978.50, down $10 on the day, which was composed of dollar weakness contributing about $10 in gains and selling pressure taking gold $21 lower. In other words, there is a distinct difference between the immediate concern in terms of the uncertainty of the Fed as well as the banking crisis, and a wait-and-see attitude in terms of the fact that we saw futures really close unchanged when you factor in dollar weakness to the equation. Lastly, silver had some strong gains, gaining 0.93% or 21 cents, with the most active March contract, which will soon move out with a new most active month coming in, currently fixed at $22.67. Unquestionably, an extremely interesting day today in gold trading. We are looking at a daily chart. I draw your attention first to the low of the day, which matches almost precisely to the closing price in New York. However, if you recall, on Friday, after New York trading, Globex took gold up to $1,997, and that is roughly where we saw gold pricing open today, although it traded to a high of 2014. It certainly sold well off of that high and closed lower on the day, as seen by this red candle here. Of course, we are currently trading overseas, and it is just at the lows achieved before Australia opened up today. Which brings us to this next chart. It is a 780-minute candlestick chart, and that means that each candlestick represents a half a day or half of the 24-hour session, one representing New York, the other representing the rest of the world, so to speak. When we look at that, what we are seeing is the fact that we had the high of the day open prior to trading in New York. That would be this candle right here. And at the same time, it beckons the following question. Because of the amount of uncertainty as to what the Federal Reserve will do on Wednesday, it is most likely that it will announce a rate hike of 25%, while there are those that think they will pause. I believe that would lose credibility in the Federal Reserve, which leads me to believe that a pause is less likely than a 0.25% rate hike. I think that a 0.5% rate hike is absolutely off the table. Therefore, my question is, will we see, we are in a fifth wave, but will we see a decline, some backfilling come into the market so that this fifth wave has a count of 5, something like 1, 2, 3, 4, and 5, if in fact we are headed to an extended fifth wave, meaning a 1.382 extension of wave 3, and that's how we created this fib extension. Those are questions that I cannot answer as of this moment, but I do believe that more data as it comes in, especially when the Federal Reserve convenes on Tuesday and concludes on Wednesday, will be filled in. If we do get the appropriate gap, it will position ourselves for our next trade to the long side. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.